Hey guys, excited to be here today. Going to be going over a company, ticker symbol DQ, which is Daqo. This is a polysilicon company located in China, one of the low-cost, high-quality producers in the world. I'm excited to be talking about them. We're going to be going over everything that I was able to find. And with that, guys, let's jump right into it. As I mentioned in that quick intro, we're going to be going over Daqo New Energy. They are a leading manufacturer of high purity polysilicon for the global solar PV industry. They also use this polysilicon in a bunch of different electronics, but the solar industry is really the main driver as it's growing really quickly, specifically in China, also across the world, but in China specifically. A quick look at Daqo's stock chart here from 2010 all the way to the current. You can see that they had a serious surge in 2020 as the market prices for polysilicon really skyrocketed, and we're going to be touching a lot on that. And since then, it has been a rough go of things, recently having a bottom around $20. Giving some context and touching on other things that could be potential issues with other companies, they have almost no problems with their current operations. The company is selling at a price to free cash flow of less than 2 on a trailing 12-month basis. They're a producer of some of the highest quality polysilicon while also being one of the lowest cost producers. They're also fully debt-free and have a net debt of negative $3 billion as of April 2024. They're continuing to grow their production capacity as well, with 2023 polysilicon production up almost 50% from 2022. The main cause of their sharp decline is a fall in polysilicon prices, which are down about 80%, causing concerns that they could continue their decline and severely hurt their profitability. As a quick look of polysilicon average selling price, you can see going back to 2018 prices kind of falling and staying low for quite a while until absolutely ripping in 2021 and 2022, hitting far above where they were before falling now all the way down to about $8. I really wanted to hit on this because in any materials industry, you're really going to see these kind of fluctuations where there are sharp inclines as demand outpaces supply. And then as those prices rise, it becomes more and more profitable for new businesses to enter that market. And as they do, it pushes supply up while demand might slow down its increase. And so that forces prices down and continues this cyclical trend of going up and down. And after you have those large increases as it falls, those businesses that were the higher cost producers oftentimes will fall bankrupt. And that's why you really want to focus on low cost producers. And that's one of the reasons why I really like Daqo. To address the current issues of low prices, I went and did a lot of research trying to determine where prices could be, not necessarily pinpointing an exact number, but getting an overall feel for this market and what it's done in the past, what's projected to happen, what the growth could look like. So we're going to kind of dive into some of that. Like I mentioned before, everything for this company hinges on polysilicon prices stabilizing and potentially rising. If it can prove things have stabilized, then the company can be re-rated to a more normalized multiple. And when that happens, it could present a potential multi-bagger opportunity in Daqo. As you guys see here below, I have 5 different studies that I went and looked at for demand for polysilicon specifically. You guys can look these up. You can see that they have their URLs right here along with the name of the actual article. In this one, they have a 7.3 cumulative average growth rate to 2027. In here, they have 14.5 to 2032. This one, they have 13.21 to 2029, 16% to 2030, and 13.2 to 2029. This gives an average growth rate of about 12.842%. Keep in mind, guys, analysts, especially here, have a big bias towards projecting more growth. They have a financial interest in projecting opportunity to bring investors in, as often that's how they make money, is really bringing money to the table through investors. So they have a lean towards projecting more favorable outcomes than what's actually going to happen. But at least you can see here that they think right now there is a serious amount of demand out there. Taking a more detailed look at past price fluctuations in polysilicon, this is a chart that I really like by this Ben Reuter research team. you can see that they have prices here going all the way back to 1977 to 2017. At different points that there were shortages, and it causes price to really increase, and it starts a steady decline when we have oversupply because more participants entered the market, pushing up supply, which then exceeds demand. And at this point, companies go bankrupt or the demand increases quicker than supply, and it continues the cycle over and over again. You can see this chart goes all the way up until 2017, which I found a chart that picks up from there. Starting in 2017, you can see from its low levels up here, it had a small increase, but then declined again until it had a monster rally up here. And you can see these different lines indicate the average prices in different areas of the world. But overall, you can kind of see this yellow line is average-ish. It's not the actual average, but kind of falls in the middle. It's actually the Europe. And you can see that this is a pretty predictable market. It continues to have this up as supply underserves demand, falls back down, rises up again, falls back down. But coming back up here to this, I want you guys to pay attention. They have actually marked out how long each of these cycles is. There's a oversupply for 8 years until it bottoms. Then there is an undersupply for 8 years until it tops, 7 years, 4 years, and this one, from what I can tell, starting in 2008 until 2017, when you can see below it started to rise again, was about 9 years. After reviewing those charts, hopefully it's very clear to you guys that the cyclicality of this industry seems to be pretty predictable. When things are at their highs, most oftentimes people and the news articles that comes out have a tone to them of this is going to last forever. When in reality, we can see it never does. Also, when things are at their worst, people feel that they are going to last forever, when it is actually rational to feel that those are amazing points to actually be stepping in and buying. And that's what I see here with Daqo. I don't think that this is going to be happening anytime soon. When I say soon, in the next maybe 12 months, that we're going to start to see a rally again in the prices. I expect the next 1, 2, 3, or even 4 years to be more of a price stabilization as the higher cost producers in the industry slowly start to fall out. It's only at that point, when demand starts to significantly exceed supply, that we're going to see major price shifts. And that's kind of what I see happening here for Daqo. I have an article here by Renewables Now in which they actually go over this exactly. They say oversupply to trigger third polysilicon industry shakeout. They said the polysilicon industry is facing a third shakeout wave which will eliminate a capacity of up to 2.4 million tons. This will be prompted by oversupply in 2021 and 2022. If you remember and look back to the charts, this is actually what we saw, an undersupply leading to an increase. And that consequent high spot price has driven an influx of capacity in China. And the reason that high spot price is actually going to cause a decrease in supply is because prices have fallen. There were so many new entrants into the market in those highs in 2021 and 2022 that they are not profitable at these new levels like Daqo is. They're going to slowly be bankrupt or merged into others, and that's going to cause supply to fall out of the market. So if I assume that the next wave of undersupply and growing demand, that Daqo will reach free cash flow 50% higher than during their peak of 2022, that would mean free cash flow of about 4.14 billion. Now remember that from their peak in 2022, their production is up over 50% or about there, and they're still going to have several more years of potential expansion before prices start to really rise. If we assume that and a price to free cash flow of only 4, that puts the share price, if the shares outstanding remain the same, at about $251. Or another way to put it is a gain of 831% from their current share price. If these assumptions come true, this could be a phenomenal opportunity, but keep in mind what this actually assumes. Daqo must survive the low prices and not go bankrupt. The low prices can lead to a drop in supply, and demand here continues. Even if all of those assumptions are true here, keep in mind, guys, that I actually don't expect to see any real moves in the stock for the next 3 to 4 years. I started a position here and have a cost basis of around $22, but I honestly fully expect this company to go lower, and I'm going to be happily adding as it does. Really, I'm basing all of my assumptions around what I expect maybe the next wave of undersupply and increasing demand to look like. As always on these, I could be 100% totally wrong and absolutely lose my crap here. But the reason that I stick with this is going back to those assumptions. They're all assumptions that I feel very confident in making. Daqo is one of the lowest cost producers, so even at these current levels, they're actually generating free cash flow. I also think it is pretty clear to me that some of the high cost producers are going to fall out of the market. It might not be as many as was mentioned in that article, but some will. And third, this is an industry that I see going nowhere in the next 20 to 30 years. Guys, this is everything that I was able to come up with. And after doing this, I was honestly more excited than the initial round of research that I had done that wanted me to start a position, which is a really good feeling. Remember, guys, this is just my opinion, not advice. Please do your own work and your own research. Investing specifically in any companies in China comes with an extra level of geopolitical risk that maybe others don't have. This may not be right for you, but for myself, it fit great, and I am very excited for the future here. I have a long-term perspective. I am not looking to cash out anytime, probably within the next 3 years at least, but we'll just have to see what happens. So with that, guys, hopefully this was valuable for you. I appreciate you guys being here, and let me know what you think. If there's any other stocks you want me to review, throw them in the comments. I'd be happy to, and we'll see you guys in the next one.